Welcome back to the channel. It's been some time, friends. Most of you are aware I've gone through some personal stuff lately. Everything's good now, though. We're all doing fine at home. And we are ready for some more TA. I'm going to try to keep these coming a little bit more than they have been, but bear with me for the next few weeks as I kind of get back in the swing of things. Today is an important day. We have a lot going on with Bitcoin because of the recent news from the Fed and inflation data, and the hike that we're expecting is 75 basis points. That's 0.75% coming from the Fed. A lot of that has caused a ton of downward pressure on equities markets and on Bitcoin. So we're going to take a look at Bitcoin first, and we're going to see what it really looks like, what are the targets we're looking at, and where do we think we're going to be in the short term. Next, we're going to look at Ethereum. Ethereum merge is happening today. This means that Ethereum is moving to proof of stake. That could do quite a bit of change with the Ethereum price and with DeFi in general. So we're going to take a look at the Ethereum chart and kind of discuss what we think the impact of the ETH merge might be and look at a few levels there that we should be aware of for the next few days or next couple of weeks, to be honest. And then finally, we're going to look at EGLD and see how that's performing. A lot of EGLD right now has been correlated to Bitcoin. So we're going to take a look at EGLD, but at the moment, I think for most DeFi chains aside from Ethereum, we really have to look at that Bitcoin correlation. Anyways, that is kind of the quick, to-do list, but let's go ahead and get started and take a look at how things are looking. All right. So we're going to switch over to, We're going to look first at CryptoQuant. So looking at the exchange reserves, the first thing that we are really seeing here is that we saw a massive spike yesterday, and then we saw a huge dump. If we look at the amount that it spiked yesterday, it was like about 11,000 Bitcoin. So we saw a huge spike of Bitcoin go onto exchanges yesterday, followed by a lot of Bitcoin moved off of exchanges. Basically, what it looks to me like happened here is that you had a lot of liquidation events that occurred, but you also had a lot of buying occurring and Bitcoin moving off exchanges. There was a good amount of Bitcoin going onto exchanges throughout the course of September, so the last 2 weeks, and then we saw that capitulation occur. Now we're seeing price and exchange reserves kind of stabilize. Exchange reserves are back down quite low to multi-year lows. So we're going to continue looking at this, but not a lot to be told from the exchange reserves at the moment. So let's move on and just look at the Bitcoin chart. So we'll switch over to the Bitcoin chart. We'll change our view here so it is the correct view. So the Bitcoin chart we're going to look at in a few different time frames. We're going to start with the daily time frame. Now, in the daily time frame, there's a few things that I'm following. There's a couple of key levels that I'm looking at. One of them is this support level. Okay, the support level I'm looking at right now is 17.6K to 18.8K. And you can see we called that perfectly. We did come down and hit support there. And now we are moving back into this resistance channel. And basically, our trading levels or our support and resistance zones have been on point because when we had this pump, so basically when we had this drop, we got support right at that 18.8K level. That's where our candle bodies are. We actually went down further to around 18.5, but 18.8K is where the candle bodies were. That's where the majority of volume was. Then we saw us go up. We went right through the 20.3 to 21.3K resistance, and we actually ended up hitting resistance on the 22.8 to 23.6K trading zone. We had a lot of trading occurring here just a few weeks ago. So we hit resistance directly on that level, and then we fell below, and now we're getting support directly at this level here. So right now, the real key is to maintain the 18.8K level. Anything in this area here is not too bad, especially if we switch over to the VPVR. What you can see on the VPVR is that we're still missing some trading volume here in the 20,000 to 21,000 level. So having some trading there is not going to be surprising. It's very possible that that's where we're going to see a lot of trading occur, but it wouldn't shock me if we also add more volume into this area here. This area is basically between 18.8K and 20.3K. So I would say for the very near short term, we should be looking to hold 18.8K. If we lose 17.6, so if we drop into this 18.8K zone, this zone here, well, then we really need to hold 17.5, 17.6. We lose that, our next support is at our regression line, and that's like all the way back down at around 15.8 to 16.2K. So this area we want to avoid, but we can still come into this area at any time. So this kind of drop is very feasible right now if we lose our support. The key is to hold that support. Now, what's really causing the problems with Bitcoin is that everything is so correlated to equities right now. You have the Fed doing really insane monetary policy. You have this Inflation Reduction Act that really does nothing for inflation. The Inflation Reduction Act is actually quite ingenious. So this act, what it's doing is it's getting policies that have nothing to do with inflation. So like prescription drug costs on Medicare, and then you have corporate tax increases, and you also have, what's the other thing? Oh, energy incentives. So incentives to use renewable energy. None of that is going to help with inflation. So calling it the Inflation Reduction Act, well, why would they do that? Right? That's the question you got to ask yourself. Well, because the reason is this is a political game. So they're getting policies that they want to pass through, right? This fits the current administration's agenda. But then what they're doing is they're naming it the Inflation Reduction Act as a way to show the public that, hey, we're doing something for inflation. Most people don't look at what's in the act. They just see Inflation Reduction Act and they're like, oh, everyone's doing something. Well, no, they're not really doing anything. The only people that can help with inflation are the Fed, and it's going to be based on monetary policy. So the way that monetary policy is done and the regulations imposed by the central banks and the IMF, and then the actions taken by the Fed, that's really what's going to dictate what happens with inflation, right? Supply chain issues are still there, but they're starting to be fixed. But all of this comes into play with what's affecting Bitcoin. You have the Fed just increasing interest rates. When they're increasing interest rates, they're making capital more expensive. It's more expensive to borrow money. So you have less people borrowing money. You have less people trading on margin, less people buying equities, less people buying stocks, less people buying crypto, less people buying anything. Even real estate prices are dropping, and mortgage rates are the lowest they've been in like 22 years. Or I'm sorry, not mortgage rates, but the amount that people are, like the amount of new mortgages, right? Mortgage rates are actually at 6%. They're the highest they've been in a very long time. So all of this that's happening is affecting Bitcoin because Bitcoin inherently is correlated to these major markets. Right now, Bitcoin has not reached a level where the market cap is high enough and the liquidity is high enough and the demand is high enough where it's no longer following these equities. Down the road, that's where I see it going. But that's not going to be an easy road. It's going to take time. We're going to have to go through another halving. We're going to have another boom cycle where all markets start rising and Bitcoin outperforms everything. Once that happens again, you're going to see a lot more people coming into the space. They're going to have a lot more, they're going to feel a lot more comfortable about investing in Bitcoin because now it's been mainstream for the last couple of years. Most people know what it is, or at least have heard of it. As they start seeing that even after a bear market like this, it's going to pick up and it's going to surpass expectations and still be the best performer, that's when I think we're going to see a new slew of investors coming in, and that's when we're going to see the next altcoin boom again. So right now, we are at a point where we're at the mercy of what's happening with global markets. We're also seeing that Russia may be doing some stuff to start using Bitcoin to trade, cross-border trading. They're going to likely be doing that quite soon because of all the sanctions imposed on them. So we're going to have to see what that does to regulation in the United States and what that means for Bitcoin adoption as a whole, right? Are we going to start seeing it as a viable asset class for people that are being shunned out of the system? We don't really know yet. All things to monitor. At the time being, you have to see what the Fed is doing. Because the Fed has announced that they're more than likely going to go for a 75 basis point increase, which is 0.75% added onto interest rates, Bitcoin and equities took a tumble because that means that people are expecting things to go down. Everyone starts selling. Everyone starts liquidating. People take profits, and then they start buying lower again. Kind of what you saw happen here. Everything started dropping over the last 24 hours, and now you're starting to see that things are picking up again because prices went down, people bought, and exchange reserves started to fly away. So people started to take things off exchanges. We saw another dip in the last day, and basically what we're seeing with this dip now is that we're kind of steady at that 20K mark. We're still in a decision point. Right now, the levels I'm looking to buy at are between 18,000 and 20,000. I think there's still a good chance that we're going to trade in this area, and that's where my buy orders are. My last purchase was at 19K, and right now I'm kind of picking my buy zones, and I'm doing that based on the TI I'm giving you now. So I'm going to be looking between 17.5 and 20K for my orders for the time being. Until I see us drop below 17.5, I'm not going to have any orders there. I think it's kind of a waste at the moment. If I see that the price starts pushing this trading zone up here at 22 22.8K, that's when I might just make a bunch of DCA purchases just to have my purchases in tow, because we really need to break this 24K level. If we break this 24.3, 25K level, like right in this area, well, then I think it's very possible that we see a larger jump and you see that demand spike come back in as we start hitting the 25, 26, 27,000 area. Like basically anything below 28 is where I'm seeing the price going if we take that bullish turn. But with everything going on with the Fed, I would kind of get used to the sideways trading for right now, unless some major news occurs that pushes Bitcoin forward. Okay, that's a lot on Bitcoin, but it gives you a lot of my thoughts on what's happening with the Fed, the Inflation Reduction Act, and all that stuff. So for right now, you have my target zones. If we're seeing anything interesting here, the only thing I'm seeing that's really interesting on the daily is that it looks like we could be getting a bullish cross on the MACD. Very, very undetermined right now, but we are seeing support on the 45 level of the RSI. This is a very, very bullish sign to see support here on the RSI. Usually when we see support here, it comes with a bounce, right? But this support is not enough. We need to see support here for a longer period of time. And if we see that support, then I'm going to expect that we're going to be heading back to that $24,000 mark and start moving upwards, putting in more trading between 22 and 25K. Keep that all in mind. RSI is very indicative, right? You see support, you're usually jumping up. You fall right through it, you're usually going to go down further. So at this point, we're starting to see support just like we saw here. So it's a very good possibility we're going to see another run like we did back here where we went all the way up to 24K. That's kind of what I'm seeing now. There's not a whole lot else we can tell. Doing TA like this is very, very difficult when you have the Fed manipulating all the markets. So you're trying to basically just look at short-term targets to figure out what your short-term DCA goals are, or maybe even what your short-term leverage trade goals are. Okay, that's everything for Bitcoin. We're not going to go too much further. We're going to now look at Ethereum. So Ethereum is going through the Ethereum merge. Now, what does that mean? It basically means that Ethereum is moving to proof of stake. This means that Ethereum will be using far less energy, and it should significantly reduce the transaction fees, which has been big for Ethereum for quite a long time. We're going to have to see how the merge process goes completely, and once it's all on proof of stake, how does it start functioning? I think it's very, very safe to assume that Ethereum is going to see a fairly significant jump out of this, at least over the next couple of weeks. It might even be sooner. And the reason I say that is because you're going to have a lot more publicity out of this as Ethereum starts becoming more energy efficient and transaction fees start becoming less, and people actually can afford to use it again. So assuming that those marks are all hit and the merge goes through properly, I think it's very feasible that Ethereum is going to start trending back up towards the $2,000 mark. I think that it may take some of DeFi with it, but there is also the chance that you're going to have some people making short-term trades, selling some other assets and getting into Ethereum. You might see that from Bitcoin. You might see that from other DeFi assets. I don't think any one will get hit particularly bad, but I definitely see the potential of people seeing that the merge goes through successfully and then wanting to bid up the price of Ethereum. So you'll likely see it go up to the 2,000 level. If it does break that, I would say 2,500 is the safest bet that I'm looking to give right now, because once we start hitting that 2,500 area, there's a lot of volume resistance there. So I would look for Ethereum to do something like this as we start getting news. And if everything goes successful, more than likely you have a spike up like this, and then you're going to have certain people taking profits and selling. And I think we're probably going to come right back to this $1,800 to $2,000 mark and continue putting in volume in this entire area. So that's kind of what I'm predicting for Ethereum for the short term. I don't think it's just going to flip Bitcoin and start going crazy unless you have like a hedge fund or something like that coming in and saying, hey, we don't trust treasury bonds anymore for interest. The stock market's completely manipulated. We're going to start investing in Ethereum for interest. Now, if hedge funds and big Wall Street players start doing that, start turning to Ethereum staking instead of federal treasury bonds, well, then there's a huge, huge potential for a lot of liquidity to come in and start buying Ethereum to stake. We don't know yet if that's going to happen, but it's a possibility. And if that does happen and you start seeing that occur, I think that something like that would not only spike up the value of Ethereum, but it would also spike up the value of Bitcoin. At the end of the day, the only fully decentralized currency is Bitcoin. So granted, you may have interest coming in from Ethereum via staking, but if you really want some place to store your money and keep it, it's going to be with Bitcoin. So it's very, very possible that you see a lot more liquidity coming into Ethereum, coming into certain DeFi assets. You might see some DeFi assets losing liquidity to go into Ethereum. But if hedge funds and stuff start coming in, I think we're expecting a big jump for Ethereum and for Bitcoin. I think it's very likely, and you'll probably even see stablecoins start going up at that point as far as market cap and liquidity goes. Well, basically, we see that 2000 is a short-term resistance. We see that now the merge is happening, and if it goes through, you're more than likely going to have a lot more people want to accumulate Ethereum so they can stake. Very likely that pushes the price up to this $2,000 mark, and we start seeing trading here. There is very low volume here, at least in the last few months. We start going back further in time, so like we go into the daily, and we start zooming out further, and you start to see that we really only have a good amount of volume between 1,500 and 2,000, right? Once you go into that 2,000 to 2,500 area, you don't have a ton of volume. And on the daily, just take a look at where the 200 exponential moving average is. It is right at the 2,000 mark. So it's very, very feasible that we hit resistance at 2,000, or we even break above it and then come back down and test it as the moving averages start shifting. So this is really going to be key. How the community, the market, how everyone really reacts as far as liquidity goes to the Ethereum merge is going to tell us how correlated are DeFi assets and Bitcoin to the broader markets. Because everything that's happening with the Fed and with inflation and all that stuff, it doesn't apply to Bitcoin and Ethereum. Those monetary policies stay the same. It only affects their liquidity. So what happens when you start having these options to put in your money and generate interest and store your value in a place that's not manipulated by the Fed? Well, there's a big chance that once that manipulation starts reaching a level where it's just, diminishing trust, you have people going into other areas, into trustless areas, enter Bitcoin, into areas where they can get better interest than treasury bonds, enter Ethereum, right? And even EGLD and other assets, you can get a lot more interest in these places. So if we start seeing Ethereum kind of pick up this momentum with staking, it's very possible that you're going to start seeing larger liquidity coming into other DeFi tokens to also stake and to start taking advantage of interest rates that you're not really getting anywhere else. Okay, let's move on. We're going to take a look at EGLD now. You know my main level, 2,500 to 2,000. So if I'm trying to do any short-term trades, I'll probably be buying where it is now and playing it by ear and just seeing how it goes. Now, if all the markets keep going down, I definitely see the possibility for the ETH merge to cause the price to go down. If there are problems with the ETH merge, if not everything goes through successfully, if bugs are found, issues are found, problems occur, well, then it's very, very possible that ETH takes a dip and you start seeing the price go back down towards the $1,200 to $1,300 mark. So this isn't set in stone that it's going to go up. I just think it's highly likely that everything's going to be successful with the amount of testing that was done. All right, so let's move on now and take a look at EGLD. All right, so when we look at the EGLD chart, you can really see that this has been kind of a terrible long-term pattern that we're seeing here. We're really seeing that we had this continuation pattern come in, and then we broke out above it, we didn't get support, and we just kept going. So if we tried to extend this pattern at this point, it would look something like this, right? We extend this out and it looks like that. And technically, that, my friends, is still a continuation pattern. That is still a live continuation pattern, which means that the targets are still active. This means that our resistance targets for EGLD right now are still the same, right? $54 to $62 is our upper resistance. That's really the key area we have to break into because we lost it pretty significantly over the last month. If we drop, I still see the possibility of going down to that $35 to $40 mark. That's kind of the bottom area I'm looking at on the daily chart. And you can see where the RSI is on the daily, it's getting resistance at that 45 level. When you're getting resistance at the 45 level, that's a bearish sign, right? You don't start really getting bullish activity until you see the RSI going above 45, getting support there, and then bouncing off. So it's very much close to that area. The RSI right now is at about 42. So I really want to see how over the next week or so, does the daily chart RSI, how do we interact with this 45 level? And a lot of this is going to be dependent on Bitcoin because unfortunately, a lot of other assets at the moment are all following Bitcoin. There are certain ones that aren't, like Celsius news coming out here and there and things are just going haywire. I don't really mess with those kind of assets. I'm just focusing on the assets that I trust and those are the ones I'm accumulating. So with EGLD for right now, I would play it safe. I would keep doing the DCA strategy, do what you're doing on the DEX, take advantage of the things you're doing, accumulate what you feel is going to be valuable in the future, whether it's Max, Locks Max, all these things. We need a lot of work to be done to make these things more valuable. And in order to make them more valuable, we also need the entire market to shift. You need more users coming in, more demand coming in. Until that demand comes in, then it's really unlikely that we're going to see EGLD or anything else just do a 100% jump, right? It's not going to happen. It'll happen when Bitcoin starts recovering, when crypto markets start recovering, and when everything starts recovering. Now, what I do see a little bit long term is that we're not too far away from the next halving. The next halving is in 2024. We're almost done with 2022. We got about, another few months left. So this means 2023 is really going to be a critical year, because 2024, we have the Bitcoin halving coming in like mid-year, like around May or whatever. So when the Bitcoin halving comes and the amount of Bitcoin supply entering the market gets cut by 50% again, it's a very good possibility that that's going to trigger the next bull run. But what happens next year could trigger it early, because what's going to happen next year is that we're going to have an election. When we have that election, they're not going to be able to keep letting markets continue to crash. I mean, take a look at the stock market, right? If you take a look at the Dow Jones Industrial Average, like look at this chart, dude. Everything that they've been doing. So this was the pandemic, right? Everything started going up. But since January, this entire year of 2022, everything has just been on a downward spiral. And there's no end in sight, because this is when quantitative easing stopped. This is when the Fed started increasing interest rates. That led to a downturn in the market. They are not going to let it last forever. They let this last through an election cycle and people's 401ks keep getting depleted. Nobody's going to want to vote for Biden and the Democrats to get back in. So if they want the chance to do that, they're going to put pressure on the Fed to loosen monetary policy, have markets start going up. They will start claiming wins from their Inflation Reduction Act and all this other stuff. Even though it's the Fed doing everything, they will claim the wins. And that will be used during campaigning. I have a very strong sense that that's what we're going to see occur. I think it's probably going to start occurring as soon as we start getting closer into that election cycle. So I think that this type of market activity, unless there's some major news coming in for Bitcoin or crypto between now and then, we could see sideways trading and a lot of volatility until like March 2023. Once March 2023 hits, I think that's when you're out of time. That's when you should already have accumulated whatever you want, because I think at that time elections start, they start loosening monetary policy. They're not doing as big interest rate hikes. They start propping up the markets again. When markets are manipulated, they are manipulated for a reason. Right now, there's no benefit in propping up the markets, right? It's not going to benefit anyone. There's no election right now. They can't claim the wins. People may not remember when it comes time to vote next year. So instead, they'll keep the markets going down, trying to reduce inflation by increasing interest rates. And then when it's beneficial, that's when the White House puts pressure on the Fed to start loosening policy so that they can show that markets are recovering, claim the wins, and try to win back the presidency. This is how things work. I think it's very, very likely that something like this occurs. So keep it in your mind, right? That leaves you maybe another 6 months to accumulate at good prices. And those prices may not last forever, because if other people in the market start to sense that this is what's going to happen, or if they start giving away tells that this is what they're going to do, well, people are going to figure it out, and people are going to start making moves earlier, and liquidity will start coming in earlier, and you'll start to see things rise. So that's kind of what I'm looking at. You've looked at Bitcoin, you've looked at Ethereum, you've looked at EGLD. I wish I could give you more on EGLD right now, but unfortunately we just can't, right? We have some key levels that have tons of support, and we have some key levels that have tons of volume resistance. That is where we need to look right now. So in the short term, I'm looking to accumulate anywhere from $35 to the current price of $50. And if the price starts driving past $62, that's when I'm probably going to try to make whatever buys I wanted to make that I didn't get to make because the price didn't go down. You know what I mean? Let's say I wanted to buy 20, 30 more EGLD, but I wanted to buy it at around $40. Well, if it starts going up to 62, I might not have that opportunity. So what I may do then is just take those funds and just buy the EGLD at around $60, right? But I'm already making weekly buys. So as long as the price is still in this area, I'm still buying, I'm still accumulating. I just think it's smart business. You know, that's just what I want to do for the long term because I see value here. Make sure you see value wherever you're investing, whether it's EGLD, whether it's other assets, whether it's Ethereum, whether it's Bitcoin. Everything's risky, especially when all the markets are manipulated. Keep that in mind. We will sync up again very soon. It's been like 25 minutes since I started recording this, so I hope you guys enjoyed this video. I tried to throw in as much information as I could because I've been keeping up with a lot during the last few months, but I haven't had time to make videos. So I hope you see me again soon. Actually, you'll probably see me this weekend. We'll do some more. All right, I'll check you guys later. Peace out. And thank you to everyone who sent me great messages on Twitter. Y'all are awesome. I appreciate you. Peace.